Hello, everyone. Welcome to the special weekend edition of Markets Around the World. I'm K2, and we have exciting news and data to discuss today. We'll cover the latest updates, analyze key macroeconomic trends, and highlight critical levels to watch. If you're passionate about the markets, be sure to subscribe and deepen your understanding of global market interconnections. In this episode, we'll explore the headlines driving the markets. Donald Trump has been elected as the 47th President of the United States, adding a new chapter to U.S. politics. The Federal Reserve has cut interest rates again to support economic growth, marking a second consecutive cut. Despite the Fed's actions, Treasury yields, particularly the 10-year yield, continue to rise, posing potential challenges. Fed Chair Jerome Powell faces questions on the rise in bond yields, but has yet to provide a clear response. The S&P 500 has hit its 49th all-time high this year, demonstrating strong momentum amid economic shifts. Stay tuned as we delve deeper into these stories and their implications for global markets. First of all, congratulations to the Republican Party and Donald Trump for winning the 47th presidential race. Trump's presidential election victory is triggering a sense of déjà vu among investors who previously sent stocks and the dollar soaring while pushing Treasury bonds down. But the current economic and market conditions present a much different backdrop compared to 2016. Investors who overlook these differences do so at their peril. So far, just a day after the election, the old playbook is playing out to a T. But will it last? The runway seemed a lot more enticing back then. Wednesday certainly marked a significant surge as investors accelerated so-called Trump trades. In fact, the stock market's performance surpassed the post-election day rally, seen when Trump defeated Hillary Clinton in 2016. The S&P 500 rose 2.5% on Wednesday, achieving its best post-election day performance on record. Additionally, the Dow Jones Industrial Average saw a jump of over 3%. Marking its largest day-after-election move, since investors reportedly backed McKinley trades in 1896. Bitcoin's recent rally to an all-time high on Wednesday has analysts predicting it could reach $100,000 by year-end following Donald Trump's presidential victory, seen as favorable for crypto. Bitcoin, BTC, the largest cryptocurrency by market capitalization, hit a record $76,481 on Wednesday, according to Dow Jones market data, and traded around $76,125 by late Thursday morning. Analysts believe Trump's win could boost policies supportive of cryptocurrencies, fueling further market gains. However, investors should remain cautious, given the market's inherent volatility. The Federal Reserve cut its benchmark interest rate on Thursday, but mortgage rates are climbing. Some brokers are even warning of a possible return to 8% mortgage rates. Markets, like the Fed, respond to U.S. economic signals, and concerns linked to Donald Trump's recent election have driven up the 10-year Treasury yield. This week, the 30-year mortgage rate rose for the sixth consecutive week, reaching an average of 6.79% on November 7, the highest in 3 months, according to Freddie Mac. This rate is 7 basis points higher than the previous week, but still below last year's 7.5% average. The 15-year mortgage rate averaged 6% this week, up 1 basis point from the previous week, and down from 6.81% a year ago. Now let's expand the conversation. I want to show you guys some data. Young people can no longer afford to buy a home. The typical home buyer age has reached a record 56 years, according to a National Association of Realtors study for transactions between July 2023 and June 2024. This compares to 45 years in 2021 and 39 in 2000. Over the last 3 years, the median age of repeat buyers rose from 56 to 61, and first-time buyers from 33 to 38, both hitting all-time highs. Buyers are getting older as record-high prices and elevated interest rates create the worst buying conditions in history. U.S. housing affordability is in crisis. Total holdings of U.S. ETF assets have surpassed $10 trillion for the first time in history. Over the past 5 years, the U.S. ETF market has more than doubled in size. In the first 3 quarters of 2024, net inflows reached $691 billion, driven by a historic market rally, according to Bloomberg. US ETFs now make up 71% of the approximately $14 trillion global ETF market. There are currently a record 800 ETFs listed in the US. Investors are increasingly turning to ETFs. The CBOE Volatility Index, VIX put-to-call ratio, has surged to 2.3, one of the highest readings in over a decade. Since 2020, it has only been higher during the 2020 pandemic market bottom and the Q3 2020 pullback. This suggests traders are betting on a decline in VIX over the next few weeks. The VIX has been above its 200-day moving average for 79 trading days, the longest streak since 2019. Markets are in risk-on mode post-election. The delinquency rate on commercial mortgage-backed securities, CMBS, for offices spiked to 9.4% in October, the highest in 11 years. The delinquency rate of office CMBS loans has now risen by 5 times over the last 2 years. Delinquencies are officially rising at a pace only seen after the 2008 financial crisis. This puts the office CMBS delinquency rate on track to surpass an all-time high of 10.3% seen in July 2012. Meanwhile, the overall US CMBS delinquency rate rose to 6.0%, the most since the 2020 pandemic. The commercial real estate crisis is real. Now let's review the S&P 500 heat map for last week. Here are the weekly performances of companies. NVIDIA, plus 9.03%. Microsoft, plus 2.97%. Amazon, plus 5.18%. Tesla, plus 29.01%. Apple, plus 1.82%. JP Morgan Chase, plus 6.30%. Meta Platforms, plus 3.91%. Alphabet Google, plus 4.18%. The CNN Fear and Greed Index has recently returned to the greed level, indicating a shift in investor sentiment toward optimism. Predicting whether it will escalate to extreme greed in the upcoming week is challenging, as the index is influenced by various factors, including market momentum, stock price strength, and volatility. Monitoring these indicators can provide insights into potential shifts in market sentiment. And these are the earnings I'm looking forward to for next week. Now let's create some charts and wrap up this video. The SPDR S&P 500 ETF Trust SPY has reached the $600 mark, aligning with your 2024 target. Given this milestone, it's prudent to consider potential market movements. Overextension and pullback. The market appears overextended, suggesting a possible pullback to around $585. This level may serve as a support zone, offering a buying opportunity if the price stabilizes. Bullish scenario. If SPY consolidates above $600 and fills any gaps, it could indicate strength, potentially leading to higher prices. Bearish scenario. Conversely, a decline below $585 might signal weakness, suggesting a bearish trend. The Nasdaq 100 ETF QQQ is showing signs of being overextended, with the RSI exceeding 70, indicating overbought conditions. Historically, such levels have often been followed by pullbacks. Expected pullback. A retracement to around $503 is anticipated before the price resumes an upward rally. RSI indicator. The current RSI level suggests that the price could dip, similar to past instances when overbought conditions led to corrections. Future outlook. After a potential pullback, the bullish scenario would be a renewed rally from the 503 support level. Sustained price action above this support would reinforce the bullish case. In the upcoming week, several key economic events are scheduled. Wednesday, November 13th, Consumer Price Index, CPI, measures the average change in prices over time that consumers pay for a basket of goods and services. Core CPI, similar to CPI but excludes food and energy prices, providing a clearer view of long-term inflation trends. Thursday, November 14th, Initial Jobless Claims, reports the number of individuals who filed for unemployment insurance for the first time during the past week. Producer Price Index, PPI, measures the average change in selling prices received by domestic producers for their output. Federal Reserve Chair. Jerome Powell's speech, Insights from the Fed Chair Can Influence Market Expectations Regarding Monetary Policy. Friday, November 15th. Retail sales, indicates the total receipts of retail stores, reflecting consumer spending patterns. All right, ladies and gentlemen, that's all for this video. If you found value in this content, please like and subscribe. If you have any questions, drop them in the comments below, and I'll get back to you as soon as I can. Thanks for watching, and I'll see you next time. Bye for now.